Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened today, and what does it tell us about the coming days. I do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little if you subscribe. And then, of course, you'll get notifications for any kind of new content that's pushed, and we usually push content twice a day at least. So check that out if you want. And if you want to email me for any kind of questions you might have, you're more than welcome to do so. My email and text information here on NeoTA TV. You can pop down and get the details down there. As far as these markets, let's take a look at what we got tonight. We've got a big, strong move to the upside, and I was dead wrong last night. I took what was there and said, I don't think that they can rally it. And matter of fact, they did try to sell it off on the QE news. But in the end, the central bankers win again. And I guess I shouldn't be that surprised by it because they tend to win anytime they play. So, you take it for what it is, and for what it is more QE, another big round of intervention by central bankers pushing this market higher. Dollar soars, euro tanks, dollar up 1.5%. Euro, down the other way. We had oil down today. Most commodities were struggling, other than the metal sector. This has flipped around after hours as a result of the king of Saudi Arabia dying. I don't know that that's going to change anything, but of course that adds a little bit of uncertainty and brings the price back up. But the big story today really is in the equity markets, and so we should probably concentrate on what those guys look like and think about what they're telling us now. And so if we do that, we're going to start with the S&P 500. The question now is given the QE, and actually let's just take a second to talk about what the QE is. It's shared risk. There was a lot of questions in the conference call about shared risk. What does it mean? Who's at risk, how much, so forth. Draghi seemed to be getting kind of perturbed at the end about it, but essentially the central bankers are going to have to share risk with or they're going to share risk with the sovereign, the banks of the sovereign nations as they buy their own debt. They can buy, pretty much all the things that were talked about the last couple of days were the same. The markets began to sell that off today because there really wasn't that much difference, and it was already kind of booked in. But as it went on, Draghi talked about two little twists that seemed to change things. One was it's open-ended, and two, it's at least 2 years, which means it's 1.1 trillion instead of the 500 billion if you think about it over 2 years. And the fact that it's open-ended says that, hey, if we need more, we'll just keep printing. And that piece of it seemed to be what goosed the markets in the end. In other words, we're going to print just like the Japanese. We're going to print and print and print until we cause inflation. Now, as we've seen elsewhere, these central bankers can turn on a dime, but he's sticking to we'll do whatever it takes. He made that promise about I guess actually almost 3 years ago now. And now, he's shooting his little bazooka off and doing his thing. And the markets rally, and they present it in such a way that the markets do rally on it. Now, we've had some tough earnings here in terms of earnings season. So I'm going to be very curious to see how these markets react over the next 2, 3, 4 days with respect to earnings now. We do have the Fed next week. But are these earnings finally going to be really bought? Or is this just kind of a spike out of nowhere that does nothing more than take us back up into the highs? And with respect to, is this going to take us higher than, just a bump? I suspect it is now. And I say that because you've got a swing point high here, you're back up there, you got a little juice on this as you come back up. So you got more juice, you're coming back, and let's remind ourselves of what we're coming back into. This bar and that high, that's kind of the key area. So it's the top of the prior Fed bar rally. So the Fed bar was here, the subsequent rally was there that took us to new highs. Now we got the ECB rally that takes us back up to the swing point high. Question is if it gets over it, what's it going to do? Well, it's going to go take out these highs is what it's going to do. So if this does climb up here tomorrow, and it certainly looks like it has a good shot at doing that, either tomorrow or the next day, well, it would be Monday, then that more than likely says we're going to the highs and more than likely going to break the highs. We don't have the confirmation here yet, but it's mighty close. That top was, and this was a big rally today to get back there, 2064.43. We closed at 2063.15. It looks to me like we're going to attack that very quickly, probably tomorrow. And if we close over it, I suspect we're going to go back and test and break those highs. Now, is there anything that tells us that that's in fact what is going to happen? And if we look at the NDX, which has been the weakest sector, or the weakest index, I should say, that index is over it tonight. It's already blown it away, so you're already over it here. You're going to go after these three swing points at the highs. There's really no volume on any of them. So my suspicion is that this area up here is going to be attacked, and attacked soon and surpassed more than likely. If that's the case, it's another nice little V-shaped rally. In this case, you know, we've changed the V to a W, and we've gotten over the middle part of the W. That W should take us back up to here, and then the suspicion is that it will break out. So you come back up here, you consolidate a little bit, and then you break out. So the NDX now has stepped up into the driver's seat. That hasn't been the case for a while, but that is the setup, and this one is already given us the confirmation that this is going to have legs. Russell, the laggard all last year, still a laggard. This one's pulling back up. Of course, the key price point here will be this high. That's going to print as a swing point high tonight. 1200 is the number there. And the NASDAQ composite, if we look at that one, the NASDAQ is right at those highs. That one too looks as if it's going to break them. And if it breaks them, it also is going to go back and test a high. So across the board, ECB has juiced these markets one more time, and they're going to make a run for the highs. It certainly appears that way. So the suspicion last night that I had that we'd get a pullback, that we'd sell the news, turns out to be false. It wasn't a strong signal. It was really more of my gut feel as to what was going to happen, and it turned out to be wrong. And you know, that's the way it goes. Let's look at the sectors real quick and just see how they fared. I didn't go through all these, so I'm going to look at them with you. So IBB, big volatility today, back up towards the highs. The housing market still struggling after those big, and here's the sort of thing I'm talking about on the earnings. You know, here's big sell-off on earnings. Okay, so what is this thing going to do? Well, more than likely it's going to come back into this area, and that's probably going to be all it can do. And the other thing, if I wanted to add a little bit more color to the idea that these markets want to push higher, you know, the question is how much higher? And I've already said that more than likely you're going to push up and get to those swing point highs and break them at the tops. But I suspect it's going to be the same sort of thing all year this year, and that you're going to get over them, you're going to fall back under them. You're going to get over them, you fall back under them. So I don't think we're going to see the kind of rallies we've seen before where they just V-shape and they double. You know, the V part of it. More than likely, that's not going to be the case this time around. Let's look at the transports. They got a big boost out of airlines and everything else today. So a nice big spike up. and some decent volume. They got over their swing point high. You know, what can I say? You get over swing point highs, you can go high. Excuse me, you can go higher, and that's what these look like they're going to do. XLB, or I mean, excuse me, the SOX. That's going to be a print. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. That's going to print as a swing point high tonight, so that one's got a chance to break tomorrow. XLB, and the SOX had some decent juice in it in terms of volume. XLB gets over a swing point high. XLE was pulled back, but it looks like it's going to close over that swing point high regardless. 77.15. Yeah, it did. So you got a break on a swing point high in the weakest two sectors, XLB, XLE. XLF, you got some juice back in it. Now it's doing a retest regen. Again, this is one of those earnings things. These guys were sold, and they came into them with force today, though. Look at the volume on that. So that looks like a lot of short covering today. So will it be able to get back over the bearish retest regen, which is 24.17? Those are the kinds of things that will definitely turn the tape. Got to make that a sideways range and be able to test the tops again. Here's a breakout on the XLI. XLK, going to try to break a swing point tomorrow. It will print tonight. XLP does break out. XLU, test the highs, fails, has more volume, will probably test again. XLV, over the highs again, so that's another breakout. And XLY, also pushing back up to test the swing point high. So sector-wise, you know, of course, they're going to confirm what the rest of the market indexes are doing, and that is trying to push the highs, and they're starting to break their highs. So, you know, if we look at, one of the things I like to look at on a regular basis is to come over to the resources, current trends, market trends, and see what these trends look like. You know, and they've been holding here in terms of bullishness, and you know, for the most part, we had three go, you know, sideways, but these were the ones, you know, if they stay bearish long enough, they can drag this down. Well, this is going to go sideways. This industrials just changed. That's going to go bullish tonight. This just went bullish. So you can see this is shifting back around. This goes sideways, and the financials now will be the laggard. So we'll see, you know, because of the way this is starting to turn, we're likely going to see legs on this, and we're going to see most of these go back to bullish over the next few days, potentially the next few couple weeks. So that's the way that looks. Let's go back to the charts and let's look at the ox markets, because this is where we saw the EEM breakout last night, got a good extension tonight. It's back over this swing point low, so that puts it back in a range trade, big, large range trade. Let's see about the euro and how much volume, big volume. So the euro blows out the bottom. You know, I talked about, there's an article out there about 3 months ago where I talked about the euro going to par. At the time, it was 125 or something, 126 up here. It was up above this swing point low, I think. And what a run this has been. You know, I've personally been short this thing all the way down, and I've taken some off as we've gotten farther and farther down. You know, I don't know what to say other than, you know, you make your currency cheap enough, and you will find buyers for your goods. And that's, you know, the currency wars they're taking place, and they're taking place with the gusto, and the euro is the latest round of those wars. Let's look at Japan's FXI, or excuse me, FXY. That actually lost today as well. So the dollar soared today. Let's pop in there and see what it looks like. Big volume again, another soar. You know, this is a problem for domestic markets in time, because we already know the earnings are getting hit by it. And so a soaring dollar is not going to help domestic equities. So when I tell you that I suspect, you know, what we're going to see on the domestic side is you're going to see the market move up, and say the prior high was here, you're going to see it move up, make a new high, and then come back under it again. Now maybe it can do this for a while and continue this, move to the north, bullishness, but this is a problem, and the longer it soars and keeps spiking up, it's going to do two things. One is it's going to make it very difficult on companies to make profits. Two, it's going to hurt sales. And actually, on the other end of things, it's probably going to make the Fed back off and not raise rates, which will help keep people excited about potentially more easing, even here. So, it's a screwed up world, folks. And, all we got to do is try to figure out which way it's going. They told us finally today. We've been waiting 2.5 weeks to get a signal, and we've finally got a signal. So you got to run with this market when it wants to run, and right now it wants to run. Let's look at the rest of these right quick. USO testing lows again, doesn't have the volume, so it goes under this big bar, 1742, and closes under it. So it's probably going to test again tomorrow. So that one can't get out of its own way. Let's see what the bonds did. Now the bonds were up big, sold off, and they actually closed just slightly down. They were down big, then they bounced after the, that was pre-market, and they actually closed pretty well. So bonds actually held up pretty well. Let's look at silver and gold since they rushed higher again. It's another test failure at the highs. And let's look at gold. And gold also test fails at the highs. These are going to pull back, folks. So that's those. Let's look at the copper. And we continue to see pressure on all the commodities. And I suspect those two are going to go down tomorrow too. And I'll take a quick look at gas just out of curiosity. And let me see. That was just hanging at the lows too. All right, let's look at the foreign markets. And I'm pretty sure all of these are going to show new highs or banging at new highs. Let's just go down one by one. We haven't looked at them in a while together. All ordinaries going back to try to test those swing point highs. It's got two of them sitting up there, so it could get a nice break. The Sensex, India, new highs, new highs, new highs. Brazil has been struggling and still struggling. Did hit it with volume, that swing point high. It's going to probably hit it again tomorrow. Let's go to Europe, the CACs, over the highs, and if we pull over the weekly chart, breaks a swing point, breaks another swing point, that one's going to test the highs. And I suspect it's going to do it, or going to try to do it tomorrow. FTSE, this one is at new highs, breaks two swing points, and let's look at it on the weekly. That's also going back to test the highs. Huge ranges, back to test the highs, just like our markets. Big kind of a W taking place here. The DAX was already at highs, makes new highs. So new highs here, new highs on the weekly, big, strong move to the north. I don't have the volumes on the China shares, but I got to switch this. I've got enough data on the other one now, so I'll switch it pretty soon. Or I'm getting to where I have enough data. So this one's just hanging up there. Let's see what Hong Kong looks like with the volumes. And that one's got new highs. Not much volume, but new highs on the dailies and the weeklies. It's over the swing point high. That one's going to carry higher. And let me go back to Hong Kong. The Hang Seng. And yeah, that one's still over the high. So that one came back and did a retest regen. Probably had less volume. Let's see, Korea. Now Korea is the odd man out because they can't devalue their currency like these other nations, and they're still struggling because Japan's taking their market share away on exports. The Nikkei, of course, up at the middle of the range, doesn't want to give it up. This is just building out a large range. I suspect in due time you're going to see these guys come back in again. Right, you're in the middle of the range, fixing to try to break to the top side again. You're going to see these guys come back one more time, and what are they going to do? They're going to tell us that they need to quantitative ease more, and we're going to see this thing spike again probably eventually after it range trades for a while. Indonesia, because they've got to fight Europe. Indonesia, these guys are kind of a lead export country now, and they're doing well. And finally, Taipei, I suspect they made their new highs. They did. They got over the swing point high, and they're going to press for the highs from last year again. Everywhere I look, it's the same, folks, and that is that the central bankers do what they want, and as they do that, they drive the markets higher, which is partially their objective, I do believe. With all honesty, I think I can say that. Let me take a quick look here. There was a couple of questions sent to me. Let me drop these in right quick and see what we got. Okay, so what we got here is two questions, both questions about the same actually. Pfizer is the first one. The question here on Pfizer is, it looks close to a breakout on all time frames with earnings on the 27th before the market opens. Could it retest weekly support at earnings? Well, today, of course, changes things a little bit, right? Because you kind of got the bullish market going again, which is going to help everything. Let's look at this high, 32. The big range bar is here. So when I see a bar like this, usually this kind of a bar will hold things for a while. And it did trade under this, but the rest of it has been up in this area. So it goes up, spikes over, it can't take it out, but it's hitting with volume. So it's got some nice spikes up with volume. Got a hammer reversal today. Tomorrow this does look to test this area. Let's look at on the weekly, which was the question. And can it test the weekly support? Well, it almost got there today. That weekly support actually would be your retest regen as well. So if you look back over here, right, that's this area. Boy, that would be a sweet spot to get it down into there. I don't know that it's going to do it though. On the 27th, huh? That's 5 days. So like next Wednesday. Yeah, let's see what the monthly looks like. It's doing about the same amount of volume. And this thing's been consolidating now for, what is that, about a year and a half? Yeah, I think this is one, you know, I can tell from your question here is you kind of want to get into this. I think I would take any weakness over the next couple days, maybe slide into a little bit because the volume flows look really good here. I don't think it's going to come back. I think it's actually going to break out on you. Let's look at the other one, Tata Motors, TTM. Okay, so Tata breaks out today, 2 swing point highs. And let's see what the question is on this one. February 9th is the earnings, same sort of question. So you got their breakout today. Now, we just look at the Sensex. Sensex is like, you know, running crazy again. 2 swing points here, breaks today. On the weekly, you're going to break a swing point as well, and you got volume. On the monthly, you're at the highs. I don't think this one's coming back before earnings. This one probably runs up into earnings and then comes back, is the way it looks. So I don't think you're going to see this one coming back. Probably what's going to happen is you're going to break out, you know, if I can draw it in here, you're probably going to see this thing, you know, try to work its way higher, then come back for a retest regen on the earnings. That's kind of the way this one's set up. Okay, folks, so another day, another central bank action, and another rally as a result. You know, I can't say this probably any more clearer than this, and that is that this kind of a push, given what we see now in the NDX in particular, is most likely going to create new highs over the next week or two. I suspect when we get that, especially if this doesn't give much of a pullback, in other words, if it just does one of those climbs, one of those V-shaped type, you know, traveling moves, then we're going to make new highs, come back, do retest, regen, and then we'll have something to measure against at that time. That confirmation will come probably tomorrow or Monday. And remember, we got the Fed meeting next week, but that confirmation will probably come there, and it will be closes over the swing point highs here over the IXI swing point, which is going to be printed tonight, because I don't think this made a new high. 47.5134. Oh, it did. So it's not even going to let it print. So this one's going to have to go all the way back to the highs. So the key will just be, does it close over the bar tomorrow? And then also the NDX, does the NDX just keep climbing now and go back after those 3 swing point highs up there? If it does it straight away, then we probably get some sort of a pullback. If it pauses first, in other words, we get over these, we hold, we kind of pause and gyrate around in this area for a little bit, then you could get a much larger push before you get a serious pullback after that. So either way, it looks to me like it's going to work its way back up there again, and it's time to have exposure on. Thanks a lot for listening, folks. I'm tired. Probably you are too. Have a great night. I'll see you actually not tomorrow. I'll see you Sunday. Have a great one.